G'day everyone, welcome back to Pete's Investing. Today is April 26, 2023. This is the US Canadian dollar update. You can see here on the weekly, the daily and the hourly, all the daily and the weekly are showing bullish movements and bullish trades only to be taken. Although just be mindful we're reaching this diagonal resistance area and that may be some level of resistance for a potential retrace to the downside. But looking at each of these timelines in more detail, this indicator down here combines the CCI 1500, sorry, the CCI 150 with a moving average, a triple moving average of the price chart, and that's moving average 60, moving average 3, and a moving average 5. When they're all in alignment, like they are here, that's in an uptrend. That's a bullish signal. That combined with the CCI 150 with the moving average 5 and the moving average 50, if they're all in an upswings, which they are, and combining the price chart with the CCI movement, that's showing a bullish direction and bullish movement. So taking predominantly long trades only. Likewise, the same methodology applies to the daily chart. You can see there the moving average of the price chart and the moving averages of the CCI 150 are showing a bullish movement only. So again, if you're trading the lower time frames like the hourly or 15 minutes or any lower time frame, predominantly long positions only. So look, just before we leave the daily chart, again, we've got this key support area at 13226 and key resistance at 13977. But again, as I mentioned before, we've got this descending diagonal trend line and it may reach that and bounce down from there possibly or break through that. So that's our initial resistance area to look out for. In terms of the hourly chart or lower time frames, or on the hourly at least, we've got the same signal down here. So if the CCI and the moving averages of the price chart are in alignment, it's showing bullish signals, and that's what they're looking like at the moment. So the CCI is broken to the downside currently. There's a very slight retracement. So the way that you would trade this is when that breaks out of the fractal. I just included the fractals there. So for example, back here, when it broke out of that fractal there, with both moving averages on both charts aligned, and that also aligns with the higher time frames, that's where you would take a long position on that bar breaking out of the fractal, and you would take a potential exit strategy, whether it's a moving average crossover or a monetary or a percentage gain. I'll leave it up to you to decide, but that's one example of trading using the fractals. To understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and support us more on Patreon. Thanks for watching, and see you in a future video.